On the last trading day, Friday, June 14, we detected two unusual trades rolling Nvidia stock options. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are now positioning Nvidia. Are they bullish or are they bearish? So that we can trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, sometimes leaked information, to make better financial decisions. So if you've been following our channel, you know that we have been also trading Nvidia. And just last week, after Nvidia split on June 11th, we shared our trade strategy in this video, which is profitable because you can see Nvidia continued to move higher. So if you missed out on our strategy discussed in this video, we'll put a link at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these profitable opportunities. Now, a quick recap of the strategy before we get into the current data. You can see here we are profitable, $391 of profit per trade now. Okay, so if you are interested in more of our strategies that have a higher chance of profit, make sure to go to our website, because Nvidia is actually not one of our higher probability of profit trades. We have other trades that we share on our website that have a lot more data that is more convincingly towards a bullish or bearish direction, because Nvidia has a lot of trades happening. A lot of wealthy investors are, one day they could be bearish, one day they could be bullish, and so it fluctuates. So this data is not as clear as the data from the stock picks that we share on our website, and that is why we are able to beat the market consistently. Okay, so what is going on with Nvidia on the last trading day? So these two rolling trades, let's take a look as usual on the option time and sales tape. We can see here there were 33,800 contracts being traded at the same time, and that is why we know they are rolling their trades, which means they are closing out of an existing position and opening a new one at another expiration cycle and a different strike price. 113 strike calls and the 127 strike calls. And when we calculate the price or the cost of this trade, we can see that because they are closing out of these July 19 options, essentially taking profits, selling these to close, and they are opening this new position here. Okay, so if we calculate the cost of this trade, $12.90 is the price of the option, but we have to multiply by 100 since these are option prices. One option represents 100 shares. So each call option costs $1,290. And since there was 33,800 contracts, this trade opened with $43.6 million. Now, how did we know these are opening trades? Well, we analyze a lot of data, and one of the signals that you can see, it's easier to show here, unlike other variables that we also analyze. You can see here these July options. When we take a look at the strike prices that they were rolling and taking profits from, you can see that these 113 strike calls here have an open interest of 45,000, much greater than the volume. Okay, so they are closing out of these 113s and rolling to the August 16th. And how do we know these are the opening trades? Well, it would make sense that the open interest is less than the volume if they were opening them, which you can see here at the 127 strike calls, we have 23,000 open interest, which is less than the volume. Okay. So these are their opening trades where they are staying bullish. Essentially, they rolled their 113 strike calls to a higher strike price and a further out date. Okay. And so by buying these 127 strike calls, we know they are still maintaining their bullish sentiment on Nvidia. So for the second rolling trade, it actually does not show up very clearly on the tape. Okay, so this is why sometimes we have to look at other data to find this information, analyze different variables to identify these trades. Because when a wealthy investor, some of them do not necessarily want to put one large order in like this one here. They want to obscure their trades. So they trade in very smaller lots, much less. So this does not show up, okay, because we're sorting by quantity, right? But they can trade things like maybe 100 contracts per order, and then it would not show up, right? But there would be multiple trades happening at 100 contracts per trade, but they're using automated algo trading very quickly so they can build up that position in a few seconds or two. So they are distinct individual orders. So those are very significant trades that we have to analyze. Okay, so what they did was for the expiring June 14. Okay, so we definitely know they were closing out of these trades because they were expiring on June 14. So on June 14, they had to take action. Otherwise, they would be assigned shares. And the action that they took was right at the 125 strike calls. Okay. You can see more than 70,000 contracts being traded. Now, what did they do with these 70,000 contracts? They rolled them to another week, June 21st. And which strike price did they pick? Let's take a look. As we scroll down, we will see where they positioned. Do you see the 137s here? More than 70,000 contracts again. Okay, opening trades. So this is where they were rolling to a higher strike price, which is again another bullish signal that tells us that the wealthy investors are staying the course of buying Nvidia stock. Okay, so that is something to keep in mind. If you are interested in more of our trades, make sure to go to our website where we share the higher chance of profit trades, also our option strategies. And if you missed out on our previous Nvidia video, we'll put a link over here where we share our current strategy. Let us know in the comments below, what do you think will happen to Nvidia? And as usual, please smash the like button. Take care and have a great day.